CPI and PPI inflation reports for April came in this week, which have caused a positive reaction in the markets. After the inflation numbers from March, the question on the table was whether the current Fed monetary policy was restrictive enough. In this video, we'll look to see if there's a risk of an inflation resurgence and when can we expect that first rate cut. So if you remember from March, the CPI and PPI numbers came in hotter than expected, and a lot of experts felt that the Fed should actually raise their Fed funds rate further in order to curb inflation. However, the Fed has adopted a higher for longer stance right now over further tightening. This week, the PPI, the Producer Price Index, came in slightly hotter than expected. As the name suggests, the PPI measures changes in prices from the perspective of producers. So it's an indicator of wholesale prices, whereas the CPI, Consumer Price Index, measures the prices that the average consumer pays. So it's not always straightforward, but an increase in the PPI can be a leading indicator of a future increase in the CPI. And this is because a lot of producers pass on their higher costs to the consumers through higher prices. So looking at the numbers, we see that the PPI rose 2.2% in April year over year, which is the highest gain since April 2023. And month over month, the PPI rose 0.5%, which is also higher than expected. In spite of the hotter numbers, Fed Chair Powell seemed to indicate that their monetary policy is restrictive enough and that they just need to stay higher for longer, thus quelling any fears of further rate hikes. At his meeting with the Foreign Bankers Association in Amsterdam, he said that the PPI numbers were actually quite mixed. And he also went on to say that we have the highest interest rates in some time. I think that it may be that it takes longer than expected to do its work and bring inflation down. I am confident that we will do that we will get inflation down to 2%. So this statement was made on Tuesday, which was a hint that the CPI numbers may not come in as bad as it was last month. And sure enough, as you can see here, the numbers released on Wednesday showed that headline CPI, which is the index for all items, came in at 3.4% year over year, whereas core CPI, which excludes volatile food and energy prices, came in at 3.6%, both of which show a slight decrease from the March numbers. Another hint that Chair Powell dropped was that the Fed doesn't need the inflation numbers in the three major categories to all come down to 2%. So you have goods inflation, you have housing services, and non-housing services inflation. And this is what he said when talking about the non-housing services inflation, which is more than half of the index. It's less interest sensitive and it may take the longest. At the same time, it doesn't need to go to 2%. You need the three of those to come out in some way that they're at 2%. So this is huge because what this means is that even with inflation being on the sticky side, the Fed is not going to wait till all three categories come down to 2%. And they believe that their current monetary policy is restrictive enough. Now, according to the CME Fed Watch tool, the estimate is that there is a 49.8% probability that the next rate cut will be in September and a 44.5% probability that the first rate cut won't be till the November meeting. So based on the data that comes out in the next couple of months, we'll know whether to expect one or two rate cuts towards the end of the year. Having said that, keep in mind that mortgage interest rates are not set by the Fed funds rate. Mortgage interest rates fluctuate based on mortgage-backed securities prices, and it's really influenced by trader sentiment and their perception of where the economy is going. So if you are looking to buy a home, there are a lot of things that you can do now to prepare and to get yourself in a good position to buy when the time is right. So reach out to me if you have any questions. I hope this was helpful. Like this video, subscribe to this channel, and share this video with someone that you think might benefit from this information. Thanks for watching. Have a great day.